Welcome to this explainer. If you've ever looked at a company's IPO prospectus and felt completely overwhelmed by the sheer volume of information, well, you are definitely in the right place. Today, we're taking a structured, straightforward journey through the Draft Red Herring Prospectus, or DRHP, for Alpine Texworld Limited, transforming those dense pages into clear, actionable insights.
So let's dive right into it. A DRHP can easily run hundreds of pages long, packed to the brim with legalese, massive financial tables, and serious industry jargon. It's this huge legal document standing between you and your next potential investment. But hey, you don't need a finance degree to understand it. You just need the right decoder ring. To make sense of it all, we'll navigate through 5 key areas today: decoding the DRHP, meeting Alpine Texworld, breaking down the IPO, navigating the jargon, and finally, assessing the risks. Starting with Section 1, Decoding the DRHP. Let's understand what this document actually represents for a prospective investor.
Rather than just seeing it as a static, boring regulatory filing, think of this prospectus as your ultimate treasure map for evaluating a calculated leap into the market. It tells you exactly who the company is, what they intend to do with your money, and literally every single thing that could possibly go wrong. It is the very foundation that the entire initial public offering is built on.
Moving to Section 2, Meet Alpine Texworld Limited. Because before we talk numbers, we absolutely need to talk about the people and the business behind those numbers.
So, who are they? Alpine Texworld Limited is an Ahmedabad-based textile company that's actively preparing to scale its operations by tapping into public funds. They operate in the bustling, highly competitive textile industry, and they're looking to really cement their footprint.
Their evolution is a perfect example of the metamorphosis required for an IPO. You see, companies constantly change shape before going public. They didn't actually start out as Alpine Texworld. Originally incorporated as a private entity called Alpine Spinweave back in February 2016, they went through some major changes. By October 2024, they converted to a public limited company and finally took on their current name in early 2025 to perfectly align with their market debut.
And of course, behind every company's evolution are its leaders. Sumit, Sandeep, and Sachin Kumar are the driving forces and officially designated promoters here. This is absolutely crucial because when you invest, you aren't just buying shares, you are placing immense trust in their vision and their execution capabilities.
All right, Section 3, the IPO breakdown. Now we get to the crucial point, understanding exactly what is being offered to the public.
The company is making a 100% book-built fresh issue of up to 1.5 crore, or 15 million, equity shares, each with a face value of 10 rupees. What's really important to note here is that term, fresh issue. That means brand new shares are being created. The capital raised goes directly into the company's accounts to fund its objectives, rather than just cashing out existing shareholders.
What's fascinating is how this massive pie of 1.5 crore shares is strictly sliced up. The Securities and Exchange Board of India ensures a very balanced market entry. Institutional heavyweights get capped at a maximum of 50%, high net worth individuals are guaranteed at least 15%, and everyday retail investors get a solid minimum carve-out of 35%.
Moving into Section 4, Navigating Financial Jargon. To confidently bid on these shares, you've got to understand the vital behind-the-scenes players and the terminology that keeps the whole IPO machine running.
Meet your cast of characters. DNA Financial Services acts as the matchmaker or book-running lead manager. They help determine the price band and market the issue. Meanwhile, KFin Technologies acts as the gatekeeper, serving as the registrar to the issue. They're the ones actually processing your application and determining your final allotment.
Now, let's break down some of the specific terms you'll encounter, starting with the anchor investor. These are the real heavy hitters. We're talking about institutions that commit to investing at least 100 million rupees. They are so crucial that they can be allocated up to 60% of that qualified institutional buyer portion before the issue even opens up to the public. Their early commitment helps stabilize the IPO and really builds confidence for smaller investors.
Next is a mechanism that directly benefits you. ASBA, or Application Supported by Blocked Amount. If you're bidding as a retail investor, this is the system you'll use. It basically ensures your money stays yours, sitting comfortably in your bank account earning interest, right up until shares are actually allotted to you. The funds are merely blocked, not withdrawn, which is just a fantastic protection measure.
And speaking of retail investors, this category is exactly where the everyday investor fits into the DRHP structure. To qualify for that 35% reservation we talked about earlier, your total bid amount must not exceed 200,000 rupees. It's a category designed specifically to give the general public a fair, balanced shot at participating in the company's growth.
Finally, Section 5, Assessing the Risks. Let's pivot to a bit of a reality check, because no explainer is complete without looking at the fine print. And honestly, the DRHP doesn't pull any punches here.
The issuer's absolute responsibility clause grounds us in a serious legal reality. The company is declaring, under penalty of law, that they have provided the full picture without hiding material facts. If it turns out there are material facts hidden from this document, the promoters and the company are held legally accountable. It's a very big deal.
But keep in mind, responsibility doesn't equate to a guarantee of your financial success. The DRHP explicitly reminds you that SEBI does not guarantee the safety of your funds. The warning is crystal clear here. Do not invest any funds unless you can afford the risk of losing your entire investment.
And then we have the specific risk of a first-time issue. Because Alpine Texworld has never been traded publicly before, the price is entirely determined by the book-building process and market demand. There is absolutely no guarantee of what the market price will be once the shares are listed, or even if there will be an active trading market for them afterward. It's stepping into the unknown.
So, we've decoded the document, met the company, broken down the offering, and stared the risks right in the face. I'll leave you with this provocative thought to ponder for your own investment strategy. Do the potential rewards of a first-time public issue outweigh the inherent unknowns of the market? Investing is always a calculated leap. But with the data you've learned to decode today, you are much better equipped to take it. Thanks for joining me on this explainer, and keep learning.